Greetings, everyone. My name is Sunil Sharma. I'm the Chief Investment Strategist at Ambit Global Private Client, here with your monthly update on investment strategy. Let's get started. We'll start with what we're seeing in the credit markets in India. The top line credit growth has picked up nicely, up 14.6% year over year, and showing a marked acceleration from prior months, particularly from the September month. The last 4 months have been better than the historical trend. Now, stepping back, looking at credit cycles, we look at the NBFC cycle. So, we saw cycles in 2014-15 that helped drive markets in 2014. And then we saw a rally around the bottom in February 2016. 16-17 was a very strong up cycle. And then we also had a cycle in 2021-22. And we think that there's clear evidence emerging that we may be starting another cycle. The credit to NBFCs is also up quite healthy, up 15.6%. And we'll cover some other ones as well. So the other one that I'll point out is industry. We've been waiting for an industry for years now, and we had a pickup in 21, and then that tapered off. But today, the industry credit growth is amongst the highest we've witnessed over the last number of years, and industry credit is up 13.3%. Power. Maybe it's because of AI, maybe it's because of the interest rate spending, but certainly the combination is driving power credit up strongly. And we're also seeing an acceleration in rural and allied, agri and allied activities. That is up strongly as well, up 12.1% year over year. And credit for autos, that's one of the sectors that we're seeing particular strength in, up 16.5%. And then just to round out a couple of other ones, MSMEs up 31%, and that's been pretty much an accelerating trend since the earlier part of the year. Medium-sized industries are also now showing a strong pickup in momentum, up 20.4% year over year. The subsector that we're seeing particular strength in, autos, is certainly one of them. And if you look at the 4-month average of auto registrations, proxy for sales, that is showing a marked uptrend over the prior year numbers. And we're seeing it across all parts of the auto industry, between passenger vehicles, light commercial vehicles, medium, heavy commercial vehicles, tractors, two-wheelers. We're seeing strong signs of a pickup in growth. The LCV and MC is particularly interesting as they are also leading indicators for rising investments, and that correlates well with what we've seen in terms of the credit data. There's a bunch of other indicators that are also showing a strong momentum. We've covered that in the commentary in more detail. What I want to focus in the summary is earnings. Now, for the Nifty, what's impressive is the top line, 13.1% ex energy, double digits with energy, and 10.5% PAT growth. Now, I am looking at operating earnings. There's a lot of noise in the profit after tax number, and a lot of adjustments that are skewing those numbers. So where we're focusing on operating earnings to get a sense of what's happening with the operating performance of these companies. And double-digit growths are fairly respectable, led by financials, up 18% on the top line, and also very healthy margins, 15.2%, 16%. Profit margins is at the high end of the range of the last few quarters. Next, we look at mid caps, and the mid caps continue to do extremely well, particularly ex energy, which tends to have a lot of noise and volatility. 14% top line growth, 18.2% bottom line growth. Strong performance continues. Mid caps have pretty much kept delivering over the last few quarters. That growth is being led by financials and also healthcare, industrials, IT, pretty much broad-based. If you look at the numbers, double-digit performance across most of the sectors, and equally strong 15.3% margins ex energy. So doing extremely well. Coming next to Nifty small caps, the 250 stock index. Again, pretty impressive numbers on the bottom up basis. 18.7% including energy, 14.9 ex energy, and again quite broad based performance led by energy financials. The margins are quite tepid, and that's at an index level. And one of our preferences is to not look at things on the small cap at an index level. Rather, the bottom up presents a far clearer picture and far better opportunities. We always believe small caps should be a space where active managers will do a better job in terms of avoiding some of the names that the index may hold. And so we look at when we look at bottom up, we're finding a lot of names in the small cap space that are quite attractive, high growth, attractive valuations, and clearly small caps after a number of quarters seem to be turning the corner as well. Coming next to valuations, so one of the bugaboos around Indian markets has been valuations. This chart looks at the Nifty PE premium versus emerging markets, and in the commentary we also share the same data on the world markets. In both instances, India's valuation premium relative to emerging markets and world markets has largely dissipated to extremely low levels, comparable to to what we've seen at previous market bottoms or during periods of extremely low valuation. And those have also been typically a good time to invest in equities. And the world markets chart is clearer as well, showing additional, verification, confirmation on that this is typically a good time for investments like equities when looking at the historical performance. We think AI is driving much of the emerging markets, the ones that are doing well, Korea, Taiwan in particular. And in time, India's story will reaffirm itself, and that FI money is likely to return to our markets. Coming next to AI and the U.S. markets, so lots of our views in terms of outlook, in terms of the hype that we've witnessed over the last few days with Anthropic and other pronouncements by other companies. So we share a lot of our views. So for the summary, I just want to highlight that the Max 7 performance, both on the top line and on the bottom line, has been pretty good, in line with the historical performance, with limited evidence of an uptick other than maybe in the most recent quarter. But largely not showing evidence of a significant pickup in earnings acceleration. On the flip side, we're also not seeing any evidence of the kind of headcount losses or reduction in growth that one would expect for companies that are at the forefront of AI. And we're not seeing any kind of evidence of headcount reductions, even in the Max 7. And so we talk about our views on where things stand with AI. Certainly, productivity enhancing technology. But the reality may be somewhat different than the hype that we've been witnessing in the last few days. And then we also talk about our commodities view. And this month we focus on copper. One of the areas where copper is inextricably linked is AI, and also well positioned to benefit from defense globally, the green energy transition globally, EVs, and also one of the critical minerals that many countries are now looking at securing supply and building stockpiles. We cover our views on copper as well. And so to summarize, we think there's a credit cycle emerging, a very strong economic data for India, a very strong earnings performance delivered by many companies in the Indian markets. And it's only a matter of time before the fundamentals, the price catches up with the fundamentals. On the US side, we think the AI story continues. There's been enough evidence of productivity enhancement opportunities that the Capex will continue. What we're seeing, though, is a rotation in preference of the companies that provide the picks and shovels for the AI story. And so many of those companies are actually in Taiwan and Korea. And we're seeing somewhat of a rotation, which explains the underperformance of the Max 7 off late. Other than that, the one big beautiful bill, the fiscal stimulus and the low rates and the lagged benefits or impacts, those coming through, all position us for a fairly steady market in the US and a resilient consumer, as well as the Capex will help in terms of holding up US growth. Emerging markets continue to outperform in the ones we talked about, as well as we share our views on what's happening with the Japanese market, another one of the markets that's doing well. And finally, gold, provide an update on what's happening with the central banks. Most of them continue to be accumulating gold, including India and China, and then central banks globally. No change in our views this month. Thanks for watching. We'll see you next month. Take care.